Bring on the angry comments. Greetings, Star Wars Stackers. How are you? I'm the Stacking Stormtrooper. If you're new to the channel, I'm a guy in a bucket talking about precious metals. So make sure you hit the subscribe button and get the bell notification click so that way you get updated with any new content. Today I'm talking about the gold-silver ratio and why it doesn't work like many of you think.
That's the blasphemy.
Many in the stacking community are always talking about trading the gold-silver ratio when they are only looking at the spot prices and they're not factoring in reality. First of all, there are many things that go into the buying and selling of precious metals. You are all aware of this. First of all, the bullion dealers and the local coin shops and whatnot, retailers, they have to make their money. So they are going to be offering you less than spot in most cases, and they'll be charging you over spot in order to make their money. You also have to factor in, depending on what state you live in, you have to factor in sales tax, there's shipping and insurance, and the list goes on and on. So many people are talking about playing this game with the silver gold ratio, and they're not really crunching the numbers and looking at things realistically. So why don't we just dive right in so you guys can see what I'm talking about. So what is the silver to gold ratio? And basically all it is the amount of silver in ounces it costs to equal 1 ounce of gold. The Romans, they put 12 ounces of silver to equal 1 ounce of gold. And then in 1792, the gold and silver price ratio was fixed by law in the United States to 15 to 1. Then in the 20th century, the ratio had an average of 40, oh, I don't want to drop this, there we go, 47 to 1, okay? So in the 20th century, the average was 47 ounces to 1. Fast forward to today, and we are sitting at 85 ounces of silver to 1 ounce of gold. Now, what I'm going to do is I'm going to fix this to make it a little bit neater for the demonstration. Now, with the magic of film editing, I am going to snap my fingers and we are going to be on a whole new setup. So I am going to show you all a couple of scenarios with the silver and gold ratio trading, and really kind of give you guys a wake-up call when it comes to doing the math. Everybody just looks at the spot prices and they're not factoring in things like shipping, if you're shipping to an online dealer, taxes, depending on which state you live in. I believe right now the count is 37 states that are currently charging for sales tax when it comes to bullion purchases, and the markup fees that any local coin shop or dealer online are charging in order to make their money. And so I'm going to show you right now, really the only way that it's going to work again is if you are selling and or buying large quantities of silver and or gold, and that you are timing everything just right when you are either at the highest peaks and the lowest valleys, depending on what it is you're trying to do. So for the sake of this demonstration, right now, let's pretend that we are going to sell silver for gold. So let's get this out of the way, okay? You are going into a store with your 1 ounce gold coin because hooray, right now, silver is 85 ounces for 1 ounce of gold, okay? So everybody is saying that silver is the better buy. Time to start trading in your gold for silver. Okay, so let's test this theory, shall we? And let me get my old archaic calculator here to demonstrate. So first of all, you're going to sell this 1 ounce gold eagle for some silver. Gold right now being at roughly $1,500 per ounce. So first of all, you're not going to get spot price for gold. Okay, there's usually a $50 spread on average for dealers and local coin shops. So we are going to pretend that you are going to get $14.75 for this 1 ounce gold eagle. Not terrible, not the best, but we're just going to say that that's middle of the road, because then on the other end, you know, the dealer would want to sell this for $15.25 and make their $50 profit. Okay, so you're selling the $14.75 right now, the gold coin for $14.75. Spot is currently at $17.50 for silver. Okay, and you're going to convert this into silver eagles. Now, silver eagles, as you all know, have a premium. They go for roughly $2 over spot, give or take. So really, our cost is going to be $19.50 per ounce. Okay, so pardon me, what this ends up getting you, and if you calculate on here, we've got $14.75 divided by 1950, and it should put us right around 75. Okay, so you're thinking, okay, I'm going to get 75 ounces, but that's incorrect. At least for me, in the state of New Jersey, where you get taxed 7%. So really what this number ends up becoming is roughly, watch, 70. So if I do 70 times the 1950 to factor in that 7%, gets me around $13.65. The 7% tax is $102. So it gets me at $14.67, right around the same range, okay? So what this is going to get you, trading in this gold coin, is going to actually only get you, in the state of New Jersey, that is, and you're going to have to do the math and check the other states or wherever you are, but you're going to get 70 ounces of silver, okay? So let's get our 70 ounces of silver. Even though spot is 85 to 1, okay, you still have to factor in fees, taxes, and what have you. So let's do the 60, what did I say, 70? Let's see, what do you got? Let's see, I feel like this is like I'm playing poker here. All right, so we got, here's another 5, here's another 5. There's our 70 ounces of silver. All right, so now you're going to sit on your 70 ounces of silver. Figure 3 to 5 years, maybe, give or take. And so now what we're going to want to do is we want to sell our silver into gold. Okay, so this is assuming that the prices shot up. Let's pretend, for the sake of math, that gold went from $15.50 from today to $17.50 an ounce. And let's say that silver went to $25 an ounce, making our ratio for silver and gold 70 to 1. Okay, so that's actually not bad, right? We've been hovering around the 93, 85, 88 range for quite some time. So let's pretend that silver gained some strength and we close the gap to 70 to 1. So right now we've got our 70 ounces, 70 ounces at 25, 70 at 25 gets us at $17.50. Okay, and remember that we said that in this scenario gold is at $17.50, and that made our ratio 70 to 1. So already you can see that the math doesn't work. Okay, so even if the ratio closed down to 70 to 1, you're already going to be paying. This doesn't even work, because now you're going to not only sell your silver, and let's pretend that you got these at spot, which most likely you would because they're eagles. You got your $17.50, but now you're going to go buy a gold coin when it's the spot price is $17.50. This is going to cost you $1,800, give or take at that current time. And then you're going to add the tax on top of it. That scenario doesn't work. The 70-to-1 scenario does not work. So let's do a third scenario. Let me grab a piece of paper here. And I hope that you guys are paying attention to this, because again, a lot of people think that the silver to gold ratio, they're thinking about spot prices, and they are not calculating anything or factoring this stuff when they're talking about it, and it's driving me nuts. All right, so here, now let's pretend we go to a 60-to-1 ratio, right? Wouldn't that be nice? And let's pretend that at this scenario that gold is sitting at $17.50. Okay, and then let's say that silver is now at $29 an ounce. Okay, so we've got our 70 ounces of silver. We've got it sitting pretty at $29 an ounce. So that equates to, if you do the 70 times the 29, it equates to $2,030 in value. And so now, being that gold is at $17.50, okay, you walk into your local coin shop and you're going to sell this, all right? We just got ourselves $2,030, or as I'd like to say, bucket bucks. All right, so you got yourself $2,030. Almost lost them there. And now you are going to buy this gold coin, which is sitting at $17.50. You're not paying spot for this. Okay, it's very rare that you will find a deal for spot. So let's say we got our $2,030, and we are going to pay $1,800, because again, that is the typical markup. Look at any website; it's around $50 on top of the spot price. So let's say, for all intents and purposes, $1,800. Okay. So we got our 2,030 minus our 1,800, and that gives us $230 left over. But that's if we're not paying tax. And tax, again, in my state, is 7%. So tax on 1,800 is actually making that coin cost $1,926. Putting me at $104, which basically, if you divide that 104 by the $29, 104 divided by the 29 gets you at 3.5 ounces. Let's pretend then, let's just make it 4. All right, let's just make it easy. 4 ounces of silver. Okay, so after doing that 5 to 7 years of waiting for the ratio to close down to 60-to-1, congratulations to you. You just walked away with either 3 or 4 free silver eagles. Now, I don't know about you, but sitting for all that time just to get 3 free ounces of silver, it doesn't make sense. So the real way that this method can work is if you have a massive amount of silver or a massive quantity of gold and are able to sit on it, play it just right, wait until it even drops below 60-to-1, because as you can see, 70-to-1, the math doesn't work, and then maybe do the transaction there, then maybe it can work. But until then, guys, I really suggest that you start doing the math and start calculating how much is your sales tax, how much is the local coin shop going to charge me, how much am I going to have to pay for shipping and or insurance if I'm selling to an online bullion dealer, and how much they're going to give you. Because again, everybody is talking about the silver to gold ratio and doing the trading on it, but they're not factoring in reality. And to be honest, it's getting a little bit annoying. So some people are actually saying also that they have done this method, and I challenge you guys to find somebody to prove it to you. Show you the transaction receipt. or something where they had an ounce of gold, traded it to silver, and then back again, and actually came out on top with a lot of free silver, or the other way around. Whatever it is that you want to do, which way you want to go, the whole point of this is to try to earn free silver and gold. Find somebody who can actually prove it to you that they have done this. I've already challenged a couple people to prove it, and they said they don't have to provide proof. Okay, well, you're talking a good talk, but can you prove that you've actually done this? And I'm willing to bet you guys there are very few people within the stacking community that said, oh yes, I've done this. Here, let me show you the facts and figures where it actually worked. So I basically think that the only way this can work is if you are timing everything just right so that you are at the highest peaks when you're accumulating your silver, and then when you are at the lowest points when silver is very, very strong in terms of the ratio, selling the silver for the gold at that point, then maybe perhaps it could work. But until then, guys, it just, in theory, it makes sense, but in practicality, when you crunch the numbers, it doesn't work. So guys, that does it for today's video. Thanks so much for watching. Make sure you check out these videos. They're awesome. Remember to like, share, and subscribe. Long live the Empire.